We went through a lot of significant transformations, which ended up resulting in sort of profitability. From loss, we went to a profit. So there was a clear sort of thing there. And we accepted our flaws. We said we are not good at this, but then we managed to convince the buyers that, yes, these are the changes we have done since then. Look at the controls, and we evidenced those controls. And it was backed by customer feedback as well. Because customers, again, I will cover that later, are your key important source. So it's okay to have a bad patch.
Before we start today's episode, I want to address a common challenge I have observed with FP&A professionals. While Excel skills are abundant, many are not fully tapping into Power BI's capabilities to enhance their financial analysis skills. With over a decade of experience in FP&A consulting and countless training sessions conducted, my most loved training by FP&A professionals, hands down, has been my Introduction to Power BI for Financial Analysts. So, for my loyal podcast listeners, I am giving you free access to it today. Check out the link in the description below to upgrade your FP&A skills today. Thank you. Hello everybody, I am very happy to introduce you to Deepak Hooda today. We have him as a guest. Deepak is basically a commercial finance director with a history in private equity, specializing in basically exits and M&A. So he's going to share some of his experience with us today on basically what role FP&A can play within the M&A and exit space with PE-backed businesses. Welcome to the show, Hooda. Deepak, thanks a lot for coming on FP&A Unboxed.
Thanks, Tejas, for having me here. I love to share some of my thoughts, and I also would encourage our sort of listeners to come back with any feedback or any points of their own. Thank you.
Yeah, no, I'm sure people will have a lot of questions because PE-backed businesses is a big area which people want to learn a lot more about. And M&A and exits is something which definitely not as much talked about topics. So I think it'll be quite interesting for people to, learn from your vast experience that you have over last 10 plus years. So basically, without further ado, how can FP&A really prepare for basically a exit, right? Because FP&A needs to make sure that they are looking at the right metrics, they are looking at, supporting the buyer's data books. Because I have done some of these, so a couple of these, as a lot as many as you, but a couple of these. So, buyers have this whole data book which they want, plus they have to make sure that that data book and the business KPIs all are combining together to tell a story for the business which makes sense. So how can FP&A help with that?
I think there are a lot of things. So what I've done is I've got a bit of a slide deck. I think they just and we can sort of look at it later. But in summary, what I can say is private equity is a different world in terms of the pace, in terms of the unpredictability. So the preparation is very different from sort of normal businesses. My view is that being such an important function, it has to really understand the story of where the business was, where it is today, and where is it going. And I believe that FP&A teams are in the best position to actually explain that.
Perfect. So do you want to share with us your slide deck that you
Yes,
have?
I want to. I want to share that with you. So for me, I think the key thing is the story of the business, understanding of the history, the current state, and the future trajectory as well. And you should have a good story, basically, which and with evidence and with backed by sort of history of where you are coming from and where you are today and where you're going. So because nobody will buy your business if they can't buy your story. For me, the story is the first thing, and especially in a PA exit, you might have strategic bias. Strategic bias are people who want their organizations were looking to basically, yes, seeking complementary products or services or market share expansion, and they love your products. So they will come and buy you. Financial buyers can be PE house. They're looking to scale and optimize and exit again. And all of them are looking for a story. So the narrative must always reflect how the business fills a gap or basically provide a high return investment opportunity.
Okay,
And
two
FP&A
questions.
teams are in the best position. Yeah, go on, Tejas. Yeah.
Sorry, two questions on this one before we move on, right? One is if you can share a particular story where you've seen that a well-told story has actually helped the transaction better. That's one. And second, all stories are not always positive, right? So, like
Yeah.
sometimes the business is exiting only because sometimes because they're not doing very well.
Yeah.
It's a challenging environment. So, as
Yeah.
FP&A now, you don't want to lie, obviously, but then at the
Yeah.
same time, how do you position yourself? What is the level of, how do you balance the need for being transparent and honest versus not being overtly negative? So, how do you balance that out?
Okay, let me answer your first question, which was basically saying, giving an example of how a story sells. In one of the businesses I've been, we were coming from a very difficult patch where we were not doing very well, to the point where we turned the business around. And so we accepted that we were not doing well, and we knew the reasons why we are not doing well. But we went through a lot of significant transformations, which ended up resulting in sort of profitability. From loss, we went to a profit. So there was a clear sort
And
of thing there, and we accepted our flaws. We said we are not good at this, but then we managed to convince the buyers that yes, these are the changes we have done since then. Look at the controls, and we evidenced those controls, and it was backed by customer feedback as well, because customers, again, I will cover that later, are your key important source. So it's okay to have a bad patch, but it's also okay to accept that yes, you have not done really well, and this was the problem, but we came in and we fixed it, and we put it right back on track. So
sounds
that's
really
still a story.
yeah, no, definitely. Definitely. And did that help with the transaction? Like, a well told story, did that help with the transaction at all?
Yes, it did, because we could evidence there, and we could show the improvements,
So that
and the improvements are then visible in your numbers. They're visible in your revenue numbers, they're visible in your margins, they're visible in your sort of employees staying in the company longer than they were doing earlier, and it's also visible in the marketplace. I mean, if you go in the market and you ask about products, or "Oh, how is this company's products are," you get a very positive feedback.
that sounds excellent, right? So yes. Okay, fair enough. If you want to move to the next one
Yeah,
then.
so I'll just talk about influence as well. So I think the key questions you need to ask yourself, the leaders as well, is FP&A viewed as a value driver or merely as a reporting support? And are we really measuring the FP&A's influence through stakeholder feedback? It's a very important function, and it has links to various departments within the organization. And the challenge we see there is a weak influence can slow the whole process down. It can increase deal friction and also cause missed deadlines during information requests. Because if you don't have influence over the key stakeholders, it can be quite difficult to get a response, and that right response on time.
Absolutely.
Yeah.
So on this one then, so you talking about okay, measuring FP&A success with stakeholder feedback, but that's always as a dual sword, right? Because I've had time when I've had to deliver a difficult message to a stakeholder. You don't have any more budget. You can't have that headcount, or you can't do this. So then at that point in time, if you go and ask them, how do you feel about FP&A or Tejas' performance, they're not particularly going to like me, right? Because I've just told them not to do something which they wanted to do.
Yeah.
So it's about so yes, while the soft feedback is absolutely relevant, and I see the value for that, but at the
Yep.
same time,
Yep.
should there be other KPIs or metrics that one should use to measure FP&A's influence or FP&A's ability to add value to the business?
I think yes, you can. You can ask question about their problems. For example, a question could be, let's say, to the product team. Does FP&A really understand our roadmap? Have they actually supported us in solving problems related to investments? So that's one question, that is a problem that they have, but you're asking that question to just check whether you understand their thing or not. So I think
Okay.
those kind of questions will reinforce your relationships as well, because they will see that, oh, you're now really starting to look at my problem. So thank you. So that's the way I see this. You can change the narrative.
Okay, perfect.
Okay.
Basically, KPIs which helps measure whether FP&A is doing their job correctly or not, essentially.
Yeah, essentially, and people know that FP&A is always especially with budgets and all, it's always that kind of a sensitive issue where they ask you for more money and you are not. But how you manage that narrative is very important, because if you are doing good for the business, people will see that eventually.
Okay, cool.
Okay.
Perfect. Okay.
All right. They just now want to jump on technical competency. Now, this is something where there could be people could argue either way. I think my belief, and this is purely my opinion, that there should be a sort of an understanding of IFRS and UK GAAP and US GAAP standards. And people might say, "Oh, sorry, this is not FP&A's role. This is technical." But I'm here talking about an exit. I think the deep understanding, especially see revenue streams in a SaaS business, could be quite complex. You could have license, subscription, managed service, partner revenue, pass through revenue. And if an FP&A person really understands the relevant IFRS on customers, they actually know how that number is derived, and they can make a sense of that revenue stream. They can also demonstrate that revenues are recognized correctly and the management accounts link back to audited financial. Because most cases, revenue can be very complex. But if you understand an accounting standard, I'm talking about understanding. I'm not talking about you go and do sort of write a paper on accounting standard. But that technical acumen, when I'm a buyer and I know that, oh, FP&A really understands. So they see that as a very good internal control audit tick in the box, that there are two teams who actually understand how it's done, not just somebody putting journals in your system.
Yeah, no, I understand. I agree with that one. That is critical, right? I mean, I've spent 16 years in FP&A, but first 5 years I did spend doing controllership kind of roles where accounting standards and tax and inter-region tax and all of those things are very, very relevant. Only then can you help the business make the right commercial decisions, because you are recommending things based on accounting standards, on tax, on all the technicalities of it, because that's what the business wants from you. You are there on that table to provide that. If you
Yeah,
can't provide
exactly,
that, what
Tejas.
the hell are you doing there?
Exactly, you're spot on with that. And I'm sure that you would have seen the difference between you and others in terms of your understanding and their understanding.
Of course.
Okay.
Yeah, of course. I
All
mean,
right.
I've done sessions, right? I've done sessions on training people for that, of
Yeah,
helping people understand
there you
why
go.
revenue
There you go.
recognition needs GR. It's a sign off on the invoice that they have received the goods or whatever else. All
Yeah.
those kind of things, or customer sign off on a milestone on a soft project, on a project basis, before we
Yeah.
can recognize revenue, and why cash is relevant and all of that.
Yeah,
It's hard
exactly.
for people to understand. People just don't get it. So that's our
Yeah.
job, right? As finance.
Yeah, exactly. Exactly. And demands will just grow on FP&A in the future. We can discuss that later.
Sure.
Okay, just quickly coming on financial cycles, systems maturity, and customer and cost based understanding. On the financial cycles, I think it's important. I mean, I'm sure FP&A teams are very good at sort of having their own timetables and other things. I would always encourage to have some sort of capacity in there. If you're doing quarterly reforecast, for example, I think you should have some capacity to make sure you can also do monthly reforecast if required, because during an exit, there's a constant need to kind of provide the most accurate position, because it's not your BAU business. The buyers are quite interested in knowing, oh, you've hit this month's numbers. Where are you with the next month? And depending on the complexity of a business, a reforecast may be required. So keeping that space is quite important. Okay. And
Yeah.
PE buyers then value businesses during an exit that actually meet or exceed forecasts, and you are providing very clear explanations. You should be able to kind of deliver flash reports and bridges between actuals and forecasts promptly during the exit. So you should be set up in a way that allows you to do that.
Yeah, but so in this one now, as you very correctly pointed out, that buyers want that you at least meet or exceed your forecast. So how do you then over achieve that while not under baking your forecast, or under basically cooking your budgets, because that is a very big temptation, right? That if you undercommit, then you can over deliver more easily.
Yes, you can. And that's where it comes down to, do you really understand your own business? And there's no harm in sort of preparing a budget or a forecast which shows that, yes, you are going up, but you're going down in these months. And then you're going up because that reflects the seasonality of the business. I think, in my view, it's you have to be very transparent, because they need to also understand the business, because they will see the same sort of fluctuations. So having a balanced budget or a balanced forecast, in my view, is the key, because some months will be up, other months will be down, and it can happen. And some of these variables are beyond the control of the FP&A teams. So they should be building something that, even if you, let's say, you miss a forecast in a particular month and then you overachieve in the next month, you should be able to tell a story that the underachievement was because of a delay in signing a contract. And then you can say in the next month, oh, the delay in signing a contract in the previous month meant that we are overachieved in this month. So you see, as long as you understand the drivers, I think you can accurately sort of put those drivers to create a very balanced forecast.
Perfect. Cool.
Okay.
Well, that sounds great.
Okay. Which nicely brings us to systems maturity. And I always would say this: the system is your best friend during an exit, because I would like to ideally get away from manual processes, especially Excel based accounts. They signal risk and inefficiency. If a buyer looks at it and asks, okay, can you send me management? How do you do them? Oh, we have an Excel of 30, 40 tabs, which helps us to do that. It's a warning sign. And I've seen that. So I think as far as possible, you should have a good FP&A software tool. Basically, that has a good flow between data, financial accounts, and then management accounts. There should be a flow that you should be able to demonstrate, not just to them, but even to the auditors or anybody internally, externally. And it should support flexible scenario modeling. So example, in a SaaS business, monthly recurring revenues, annual recurring revenues, churn rates of customers, just as a sort of examples, the system should be able to demonstrate that.
Yeah, no, I mean, I think that this one, I think hits home for me at least a lot, right? I mean,
Yes,
I
yes.
believe in having a robust FP&A infrastructure for sure, because if you don't have a robust FP&A infrastructure, then you know what, you're going to spend nights and nights in office trying to answer every question for your from your new buyers just because you have nothing in place and everything is in Excel. I mean, that's absolutely nightmare scenario. But it's a good point you bring out the ARR and the MRR and things like that,
Yeah,
because
yeah.
I mean, in today's world, right, people talk about connected planning or connected forecasting and things like that. So if you really bring in the connected planning or connected forecasting and connected FP&A, then the reality is you have all the business drivers in the FP&A tool, whatever the tool is, and then starts telling you that this is your financial number, but this is your operational driver which has resulted in that number. And that is where then I think it starts becoming very, very interesting, right?
Yeah, absolutely. Tejas, and you stress a lot of that. I can see in your posts as well on LinkedIn and other things about that. So I think I fully agree with you on that.
Cool. I mean, but any example where you have seen where the lack of system has created a nightmare during a M&A exit?
Yeah, I mean, I can give you an example where in one of the companies we didn't have an FP&A function at all. So when we started out, we started to look at, okay, let me try and get staff cost at least sorted out. And every time somebody sort of moved role, for example, within the departments or left the business, rejoined the business, we were always reconciling back to our Excel model. And sometimes the Excel model will be out of date because, let's say, for example, I may have handed my notice today. My manager knows, but my manager told nobody. And suddenly we might take a decision, oh, we need to reduce cost in this department, but I'm already leaving, so you don't know that as an FP&A. And you propose something to say, hey, we need to cut down your cost, but I've already left, so you won't see my cost from next month. So you see, so I've seen a lot of that. And then staff cost is one of the biggest costs. And in times like this as well, I think these small things, but these become into big problems in the future. So having a process which automates this through a good FP&A tool, you can automate it, is the key.
I completely agree. I mean, these are things which, and to today's day and time, to be honest, it is everything is affordable. It's not even
Yes.
like it cost an arm and a leg, and it's going to like be very, very cost inefficient. It's really very, very cost efficient. Anyway, customer and cost based understanding.
Yes. So coming to that, for me, nothing sells without customers. Buyers will ask for customer references. That's inevitable. They would want to talk to your top five key customers. So I think as an FP&A person, you can try and understand your customer journeys, depending on the size of the business. If you're B2C, of course, it's a different model, but I'm generally talking about B2B. You should know when they came on board, what are their growth patterns, what are we selling to them, what services they're buying, what kind of recurring revenue versus non-recurring revenue sources they provide to the company, and how many customers have joined, how many have left, if they've left, why did they leave. Because I think it's important because when the questions come in as part of sort of quality of earnings or due diligence or whatever, you are expected to understand their journeys. Because I'll give you an example. In one of the companies I worked, we've grown a customer by almost 200, 300% over a period of 3 years. And the story around that was, okay, this customer joined, we sold them a basic product. After 1 year, we sold them our second product. And now after 3 years, we sold the another product. And these are the services they're buying from us. They're growing with us. In fact, they are growing as well. Their revenue has gone from X to Y. We have grown with them and we will continue to grow with them. And this is why we are justifying our forecast that is out for 3 to 5 years. And this is how, so you see how I've connected the story. I've linked my customer products, etc., with the story of the customer. So understanding that basically gives buyers assurance. Yes, the forecast looks credible in the future.
Yeah. I think credibility is critical, right? When when a PE house is buying you out or somebody is investing into your business, I think credibility is the most important thing. Because if they don't trust you, if they think you are making up stuff, then that is where the challenge lies. And in your story, it is brilliant, right? When the customer is growing, it automatically justifies your existence and your growth alongside it,
Yeah,
which
yeah, exactly,
then
exactly.
becomes very difficult to argue with, if even if one wants to argue with it.
Yeah, exactly. So another point on cost base as well, I want to touch here. For example, I'll give you an example of staff. FP&A must be able to link staff costs to the business story. For example, your headcount is going up and down every month, and you are telling a story. Oh, we are a very stable business, and that. So how does your headcount is going up and down so much? Why is it movement in your headcount? So, for example, your staff cost increase due to strategic hiring aligned with the new product launches. That's a very good example. And you can say as well, depending on the business, my headcount is going down because we are getting rid of, for example, non-performers. And that's why headcount, and we are hiring more skilled staff because we know that our business is shaping in a way that we need a certain set of skill set. So that's an example from a business I've been in where this actually happened. So yes, it is a believable story, and we could evidence that.
No, that is it, right? So the reality is that your headcount being the biggest key part of your business, as long as you can relate that to how business performance is. And I don't know. I mean, I have learned. I have always focused on a leverage P&L, where your net profit growth should be more than your revenue growth. By you having some amount of stable, basically cost base. That always talks about better productivity in a business, right? Because improved productivity is something which any investor would want to buy into.
Yes, absolutely. The investors are also looking for some sort of synergies. Okay, if this is the cost base, what revenue it is delivering, and is your cost base moving in line with your revenue as well? Because what happens is, let's say for a business, for a B2B software business, you have 250 people in the business, your revenue is, let's say, 50 million. Then you're showing a forecast of 60 million next year with no headcount increase stages. And you might mean, oh, the question is thrown back at you. Oh, are you overstaffed at this moment? Because you're not showing an increase in your staff, even if you're growing by 10 million, which is basically 20% of your last year's revenue. So you have to be able to explain both scenarios why you're not growing, or you're going to add, if you add certain people, tell them, oh, we're adding them halfway through the year because we think the ramp up on revenue will be seen at those times. So we don't need a full years. So that is the story I'm talking about. You should be able to align to the business story.
Yeah, we are phasing up, we are ramping up this year so as to be able to deliver the 10 million extra revenue next
Exactly,
year.
exactly,
So
exactly.
yes, the people, 250 people is not throughout the year average. It's the end of the year headcount.
Exactly,
While
exactly.
the full
Yes,
year, again,
yes.
the full year average, for example, I'm just making this up.
Yep.
Full year average is 220 because in the we started low, we ended up high. Average is 220. Now that starts to make a lot more sense, right, to the buyer. That's the perspective.
Okay, jumping on to the next one, I think again I will touch on the FP&A team structure and the mindset both. I think I would always say that your FP&A team has people with different potential skills. Some will take on more, some will take, but avoiding over reliance on a single person, and ensuring redundancy and cross training is very important because somebody might leave because process can be overwhelming for certain people. And also, sort of, for me, collaborative cultures internally and with external advisors is very important. For example, there may be a investment house helping you with the exit. In our case, we were very closely working with them and still maintaining a very collaborative culture because they are at the front of the buyer at times. So the story you tell them, you need to make sure that the investment house is telling the same story to the buyer. So that is very important. Designate a point person to liaise with advisors. Like, I think, like somebody like a project manager or somebody who's been through an exit is important. And also, you can prepare the team, the mindset by saying the career benefits it brings to them and the learning experience during the exit process. I learned a lot during the multiple exit processes I've been. I think I can write a whole story on it. I can also write a story on the learnings and all the sort of the things that I will not do again if I'm doing an exit. So those are the kind of thing. And I would always encourage to hire some temporary support or consulting specialist with exit experience if your
Yeah.
team has not been through that previously, because that also sends a signal that, yeah, there is somebody who's already done it and they are here to support and help us and guide us.
No, that is critical, right? I mean, getting some external help or external consulting is always helpful simply because, if nothing else, it provides you an outsider's view of how the world works. So that, because sometimes, your own voice becomes your validation, whereas a third party looking at it and having somebody who's been through this exit process like yourself, then you will come in and you will immediately say, yeah, but what about this? Because sometimes obvious is missing and people miss out the obvious because they can't tell the wood from the trees, and therefore
Yes.
they are a bit lost. But I like your first point about, basically not running a single point, like avoid a single person reliance.
Yep.
So having a good FP&A infrastructure makes sure that the load can be shared across the team, rather than all the load on a singular person who has got, say, for example, macro skill or Excel skills which are a bit more advanced, and therefore the poor guy
Yeah.
or lady is
Yep.
in the office, you
Yeah.
know
Absolutely. Absolutely.
all day and
Spot
all
on,
night,
Tejas.
which is
Yep.
crazy, right?
Yep. Yeah.
So, yeah, no, I mean, I agree. I mean, in G Healthcare, we used to have this saying that what if you get run over by a bus? You cannot have processes where we cannot run this business because you got run over by a bus. I mean, a bit extreme example, but the
Yep.
reality is that business needs to have a continuity plan around it
Yeah.
if people choose to move on.
Yes, exactly. And it can happen. It has happened with us as well. So I would always encourage, and that's the learning I was telling you about as well, is that you need to spread and also allow other peoples to step in and learn as well, because everybody's looking for that kind of, I want a little more experience. So understanding your team and your mindset is very important.
Yeah. I mean, I always use the phrase share the love.
Yeah. Or the pain. Yeah,
Yeah, that's the point. So the pain is the love. That's the love which is
yeah,
coming from top
yeah,
down. Share
exactly.
it across.
Exactly. Okay. Now let's come to the eighth one. I think this one is again, I would imagine this is already in place, but your governance process and control makes a big difference. Okay, your sort of, buyers might ask, okay, show me a paper on your revenue recognition policies or this particular process. I want to understand. How do you sort of engage vendors and headcount approval process? What exactly? I need a written document because they want to see something. Because if it is not written, it's not there. If it is in people's mind, it's not a policy. A policy is something which is written down and understood. So they want to
Documented.
see that. And being through an exit, we have done that. We have even created ones which did not exist at that time, just to give the buyers assurance, because the process was there. Everybody knew about it. Everybody was following it, but it was not written down. So it's very important that they are written down. And FP&A team, I believe, is also a sort of a function which should monitor risks and opportunities tracker, and looking at that, because again, those might impact your forecast. So you should know what are the risk businesses facing.
No, definitely. I completely agree. I mean, the business, what is not documented does not exist. I
Yes,
think
exactly.
that is critical because,
Yep.
again, as we said in the previous point, what if the person who has it in his head leaves? The
Yes.
the person has left, and now with his head, it's gone out of the door. Now your
Yeah.
policy is gone out. Now new person will come in, and new person will start a whole new different policy, which
Yeah.
completely means you're now inconsistent in your first year versus your second year. So having documented basically governance processes and controls in place, and also again, I think from a controls perspective, at least my experience tells me, if you don't document it, people don't know what is expected of them. It is very,
Yes.
I know it's very simple when you say it out loud like that, but literally people just don't know what to expect from what is
Yes.
expected of them. So what is my
Yep.
job? Like literally the question is, what do you want from me? If you tell me, they will do it for you. But if you
Yes.
don't tell them, they will they will not do it for you because they don't know, not
Yeah,
because they're
exactly.
lazy, right?
Yep.
And so
Yep.
a lot of friction and a lot of process efficiency can be avoided by just documenting and being more organized around these.
Yeah, exactly. And there is the last one always is sort of a key driver as well. So the team rewards and incentive make a big difference during exit process, because exit process are really tiring. They take a lot out of everyone, the leadership, the teams, the FP&A. FP&A's workload almost doubles, triples, depending on the series of questions and things that the scenarios they're required to run. So I think setting a clear financial incentives, bonus tied to, for example, successful exit, offer an incentive through, it should offer also in case of an unsuccessful. For example, the team should know, okay, if we exit, this could be our incentive. I'm talking about financial. And if we don't exit, obviously it won't be the same, but there should be still some reflection. Because if you tell somebody, oh, we don't exit the process, you got nothing. See what it will do to the morale of the team with no fault of theirs. So it's very important that is done, and also non-financial incentive like career advancement, recognition, people who have stood out, people who have spent weekends, people who have given up their evenings, their family time, because you should be able to sort of help them in their career advancement as well. Recognition in terms of achievement, or promoting them internally would definitely help, because then they see, okay, how's my effort helped me? I've helped the company, but how is that helping me? So it's very important that this is done prior to starting the process, to maintain the morale through the entire time. And normally you can get this funding for bonuses from the BE house, and they can approve a budget which does not kind of impact the internal budgets of the company, because at the end of the day it's their business whom they're trying to sell. So it's very important that not having this could seriously impact morale.
Yeah, I think I like your both your points in terms of having a pre-agreed budget and a budget for incentive on exit. But I even more so like the fact that when you're highlighting that even if the exit doesn't happen, you still need to basically support or reward the people, because otherwise, what happens is FP&A may be more inclined to ensure that this transaction happens, whereas you don't want FP&A to do that. You want FP&A to be the gatekeepers of truth and really bringing the story together correctly, not bias in any way. So if they're incentivized on both sides, then you ensure that they are not biased and they're actually going to support the whole process
Yes.
quite efficiently. I think that's a very very good call. Actually, I don't think a
Yeah.
lot of CFOs, because at least the two I was a part of, let me tell you, I was not incentivized at all in any shape or form to support.
That's a
But
shame. That's a shame,
yeah,
really,
but
because yeah. We see. I'll tell you one more thing. Why I think when we go through an unsuccessful exit, what happens is obviously morale is down, but the team will see the financial award as an outcome of their efforts, so that they're ready next time as well. Because you're gonna sell the business again, won't you? So otherwise, what's going to happen is the moment you talk about, okay, oh, we'll be planning another exit in 1 year's time, most of them will start saying, oh, really? Okay, I'm not really interested. I'll probably look outside where I might be incentivized, because you didn't incentivize me on, and what's the guarantee you're going to exit again or not? So in order to prepare them for the future exit, you have to incentivize them.
yeah, yeah. No, I agree.
Like
I
it's,
agree. I mean, it's like a sales guy, right? I mean, you
yeah,
incentivize a sales guy and you don't ever think about it twice.
yeah,
You give sales bonus or sales commission when you are asking over and above from basically FP&A teams. Then yeah, I mean, you incentivize them to deliver you over and above. I don't see anything wrong with that. Actually, that
yeah.
makes a lot of sense.
Okay, so
Cool. No, I think
yeah,
that's
that's it for me in terms of. Would you do you have any sort of questions
Yeah,
that
no,
you
I do.
probably
As
would
you
want to
know,
ask?
right? I mean, as I
Yep,
communicated, we are going through the same three standard questions with all our guests. So
yep,
I'd like to ask you the same three questions, if you don't mind. But before I do that, actually, I would first like to thank you for your guidance on how one can FP&A can prepare for better exits. I think some of these tips actually, a lot of them validates what my past actions have been, but some of them are still interesting. I think it's a learning process for me as well. The next
yep.
time somebody's talking to me about exits, these are kind of the points I'll raise to them and then send them in your direction, maybe.
Yeah, you can. I mean, I'm always open to a exit conversation. I enjoy that because
Perfect.
it's yeah, it's a good challenge for. I think if people get the chance, they should take it.
No, perfect. So, okay, where do you think the future of FP&A is? So, over three standard questions, right? So, first, where do you think is the future of FP&A is in next 3 to 5 years? Try and not focus only on AI. I know AI is going to be critical
Yeah,
in the future, but
yeah,
we all just can't say AI and then that's the end of
yep,
conversation. So,
yep.
realistically, 3 to 5 years, where do you think is the future of FP&A?
Okay, so to answer your question, I think to me, it's always FP&A should always be evolving from reporting to strategic business partner more. I think there's still a gap, and we know that. So I think that continuous evolution should just be there. It should continue, shouldn't stop. And then FP&A, I believe, could drive a lot of systems maturity and data integration. We still have a lot of FP&A teams stuck in Excels. Yeah, that works for them, but There's a lot good you can do if your systems are mature, if there is continuous flow of data, so you can do forecast and almost in real time if possible. Then also you need to be a more sort of incorporate holistic risk assessment, both macro and microeconomic factors, because businesses are today impacted by everything from tariffs to something happening in some other countries. So I think it's important to understand that, and also kind of, again, business oriented, get closer to the business. It's very important as much as possible. And also I would say that learn, improve, learn from what you have not done well last quarter, how I can get better, address your weak areas, and improve performance quarterly, annually, as much as it's required. Do your own assessment, get more feedback from business, get feedback from top leadership, and see how you can get better. Because if you are doing this process on a continuous basis, the future can be anything, and you will be prepared to take on whatever comes your way. I think it's all about preparation. So, and that starts now. In fact,
No,
Greg.
I completely agree. I think so. What you're saying is FP&A infrastructure, basically be aware of the market conditions, be closer to the business, and Kaizen, basically always improving yourself
Yeah.
one step at a time so that you
Yep.
can then better at FP&A. Yeah, I mean, I think this is very sound advice. Most people will do well listening to even half of it, if not all four of them, to be honest. So
I'm sure
yeah,
they're already doing, some of them already sort of on the journey. I think it's just about the continuous improvement, and getting better every single day. I think which makes the difference. And you need to sometimes, you're on your BAU tasks, and FP&A can be a very, very busy function. And you could just, a month could go by and you haven't done anything to improve something. All you have done is delivered what you delivered last month. Yeah, are you getting better is the question that everybody needs to ask.
no more, definitely. So, what is one thing that most FP&A functions need help with today? Now, to help them with a better strategy, to become a better strategic finance business partner. So, exactly
Okay.
as you said, right? What is
Yep.
one thing you think they need to become from reporting to strategic finance business partner?
Okay. I think the one thing would be the backing from senior leadership to engage closely with business issues, because often it can happen if you don't have the support from senior leadership in business issues, then they can be easily be overlooked. If, example, investment case, where somebody's looking to invest and looking to increase sort of, their product investment. If the forecasts indicate there's no market for the product, for example, you've done your benchmarking, you go around the market, you think there's no future, FP&A says, okay, it doesn't seem, market reports suggest there's no future for this product, this might become redundant in 3 years, why are you spending 500,000? So that's where I think you would expect the senior leadership to come down, sit down, and actually look at that particular investment case to say, hey, FP&A is saying something, let's look at it. And if they don't have any powers, no support, they can easily be ignored. So I think the backing from senior leadership is key.
No, I completely agree. I've had that story where basically there was an ongoing negotiation, and I categorically said on this price negotiation, we are not getting the best volume commitments. And luckily, I had the backing of my senior leadership. I was able to exactly voice to them why I'm saying what I'm saying and what is my argument for better volume commitments. And as long as I was able to justify my argument with data and with backing, then I got the senior leadership to listen. Because they're like, "Yeah, okay, he knows what the hell he's talking about. He's not just telling an emotional story, he's telling me a practical data-led story," which then starts to make a lot more sense, I think, for people. So yes, I mean senior leadership backing, but to ask for that backing as well, I will say for FP&A, come with data. Don't just
Yeah.
ask for backing because you feel like they should back you.
Yeah.
No,
Yeah.
nobody
Yeah.
backs you
Data,
like that.
data is important, critical.
Data is critical.
Absolutely. Yeah.
Okay. So for someone who is looking to move into FP&A or is just starting in FP&A, what skills or certifications, right, should they be looking at or you would recommend?
Okay, I'll start with the basic. I think having a basic foundational qualification like ECA, CCA, CMA, CPA, I think is absolutely critical. The reason I say this, they set the foundation in those early years when you don't know much, and these give you a bit of confidence as well, an understanding of how things work. So I think that is absolutely important. It's like a theory test before you go into driving license, actually start driving. So you see, if you don't do the theory test and you go on driving, what's going to happen? So foundation qualification is must, and then also again your leadership, your guidance from your leaders is very important. If you're looking to move somebody into an FP&A, just don't throw them into an FP&A and expect them to do well, because you have to make them understand what the role expect, what challenges you might face, and where it might lead to. And sometimes somebody may decide, oh, that's not for them. That's
And
not
that's
what they're
fine as
looking for.
well.
Yeah. And another thing I would say, self-awareness, knowing your own strengths and areas of development. And some might argue, okay, that comes with experience. Yes, that also comes with maturity. You can still know your strengths and weaknesses when you are straight out from a graduate, university, or you've just done your ACCA. And again, that's critical. Growth mindset. Are you somebody who's going to learn from failure? Have you failed many times? Are you going to stay resilient? You'll keep improving. So because you will see failures, everybody sees failures when they join. Sometimes they send a wrong report, or sometimes they don't understand what needs to be done, and they do something else. Will you learn from it? Will you be worried about it all the time so that it impacts whatever you're doing during the day? So that kind of mindset is very important. I would definitely encourage anybody who's new, read books. They help you build that, or talk to sort of somebody who's higher up the ranks. And of course, continuous learning. That's my favorite. Learning and development. Stay curious, be proactive, improve your skill set. If you keep hearing AI all the time, okay, go and check it out yourself. Do something on ChatGPT. Does it work? Does it make sense? Learn something else. Read a book on AI to actually see what is this hype about. Don't just believe what you see or hear. Do your own analysis. Do your own check. Do your own critical evaluation, and then see, hey, I know there's all hype, but this may not impact this in a certain way. You see, having your own perspective is important.
Yeah, no, I think that is very sound advice, right? I mean, the number of times our speakers have come up and said, be curious. I think evidence of the fact that leaders are expecting their teams to be more curious, more agile, and more outgoing to figure out and come up with answers, rather than just keep doing the same old, always done it that way
Yeah.
conversation. So yeah, no, that makes a lot of sense. So based on our discussion today, any closing thoughts?
Well, I would just say that I think FP&A is something that will be very critical as businesses evolve and become more complex. The environment today is very complex. You have climate warnings, you have other risks flying around everywhere. I think FP&A I see this as a major driver of business growth in the future. I think, but you have to be prepared for it. So it's like saying, a very good example is, if you've played in, championship, in a few years time you're going to be in the Premier League. So you have to make sure you are up to that level, and that only happens through when I go down and sit down and I completely accept my flaws and I say, hey, I don't know how to do this. I will go back and learn this. So that's the question everybody needs to ask themselves, especially FP&A. Yes, you can be in a delusion of I am the best, but there's nothing such as the best. All you need to is to get better. So this thing applies to individuals, and many it applies to individuals, everybody in the team, including the director, the leaders, the CFOs, even the CEOs. Everybody has to get better at managing business risk. And there are a lot of more businesses are much more kind of on a riskier environment that they've ever been before.
No, agree.
So that's what I would say. Be prepared. So let's start now.
Perfect. Thank you so much, Deepak. Thank you for your time today. I'm sure the listeners have learned a lot from this session, especially anybody working in an M&A and a exit environment. I'm sure they have picked up enough tips to go back and try a few out in their business. So thanks a lot. Much appreciate your time, my friend. Thanks a lot.
Thank you, and thank you, Tejas, as well. And I would say to your listeners, and I would say to everybody on LinkedIn who's listened to the podcast, please feel to put in comments your thoughts, your experience, because again, I'm still learning.
So are we. We are all learning.
Yeah, exactly.
The older you grow, the more you learn that the little you know. Anyway,
thank you, Tejas. Thank you for time. Thank you, sir. Thank you. Bye-bye.